environment, hopefully give you some insight as to some issues that can help you in regards to managing some of the finances within your organization, and possibly give you some tips going forward as to how to make things more simple from your perspective in order to manage some of the financial challenges that you face, to allow you to better focus your attention upon patient care. Some of the issues that we plan upon, some of the objectives that we plan upon touching upon today are controlling your daily bookkeeping activities, improving your cash flow, identifying potential cost-saving avenues, and proactively managing your clients' finances, as I previously alluded to. The agenda will be as follows: how to bill your patients correctly. And that's really important from a cash flow perspective. Do it right the first time is my motto. Managing your supplier payments. You want to make sure that if you have billing terms with your suppliers, you leverage that, because essentially it is an interest questions as we go along. Feel free to start typing them in right now. There will be a Q&A session after the presentation is over with, and I will try my best to answer as many of your questions as possible. Again, as I mentioned to you previously, I know many practitioners would rather be dealing with their patients, improving patient flow, improving patient care, rather than be dealing with the day-to-day accounting practices, which I know many of you are relegating it to other personnel within your organization. Some of them may not be highly trained accounting people. Some of them may just have an administrative background. So whatever information I can give you today, hopefully you can convey to the individuals that are handling your accounting processes on your behalf, or if it's yourself, maybe I can give you some insight to help you better manage your finances and turn around and have a better focus upon your patient care and dealing with your patient inflow. Some of the terms that we're going to be discussing today are accounting terms, so I don't want to get you lost too much in some of this jargon. Accounts receivable, I'll be referring to that as AR. Accounts payable, which are supplier payments, that's AP. Petty cash is your cash flow on hand, and then we've got various types of taxation. One of them I forgot to put in here, but I'll touch on that in a second. GST and PST and HST are all Canadian sales tax codes. In the U.S., each particular state has their own sales taxes. They're also known in many states as use taxes. The term there is interchangeable. Sales and use tax are the exact same thing. The sales taxes are treated differently from state to state, and we will get into some of the more specifics as we go along. Patient billings. As I mentioned to you previously, it is important to do your patient billings right the first time. Errors in patient billings, especially when they're related to insurance-related group billings, can only cause delays in getting reimbursements from your insurance companies. I've heard from practitioners on numerous occasions where sometimes they're waiting 90 to 120 days to get reimbursed from some insurance companies. And 9 times out of 10, there was an error in the actual billing. Either the wrong billing code was used, or there was an incorrect form was submitted, or, for instance, the patient may have changed group providers, not informed your clinic, and the insurance claim form was submitted to the incorrect provider, and you're not hearing about it until 3 or 4 weeks down the road when the claim was rejected. So it is important to discuss the if it is an insurance-related billing, to discuss those facts with your patient before the billing is actually completed. Make sure that you have the proper billing information on file, their proper address, their social insurance number if it's necessary. In the U.S., it's their Social Security or their group benefit plan, their HMO, whatever the case may be. Make sure all of that information is correct and up to date. Therefore, when you go to submit your group insurance billings, that it is complete and it is correct. Thereby, you won't have to wait an extended period of time to be reimbursed from your group insurance plans. Again, we hear that time and time again here that too many practitioners are waiting an excess amount of days to be reimbursed, and that's just killing your cash flow, and that's just not helping you to pay your own bills, pay your salaries, and pay your suppliers. Not even discounting yourself in that regards. So again, I do strongly suggest that you ensure that before your patient leaves your office, that either if they're paying by cash, sure that you have a way of becoming reimbursed with credit card, check, or so forth. Make sure that it is discussed what type of form of payment is going to be remitted to you, and that the information is correct, so that if there is any type of follow-up, the follow-up is easy to be completed. As I just mentioned to and I alluded to, these are some of the issues that we do hear about quite a bit. Incorrect patient addresses, telephone numbers are incorrect, billing codes are incorrect, the proper treatment codes were not inputted. It is also an opportunity to upsell the patient to additional types of services that you may have when you're discussing the verification process with them. There may, if your clinic is involved in selling any type of ointments or any type of additional treatments, such as massage therapy treatments, that is a possible opportunity to upsell and add some additional patient flow to your clinic. Outstanding billings. It's again, this is a popular issue. There's insufficient follow-up upon outstanding billings, especially if you allow your patients to pay on a credit term basis. We hear time and time again as well where the clinics don't bother following up with an outstanding patient billing until it's 2 months after the fact. Well, that makes it very difficult to collect anything. I don't care if you're in a clinic environment or a corporate setting. If you're not addressing an outstanding billing still 2 months after the fact, you're going to have some significant challenges trying to collect from either the patient, from the patient itself. So we do recommend, if there is an outstanding patient billing that's exceeding 3 weeks, that you do follow up with it. If that's an independent patient, or if it's a group insurance, if it's an insurance company, again, after 3 weeks, that is a very reasonable time that you should be receiving a payment. And if you're not, I do recommend a follow-up within that 3-week time span rather than waiting 2 months down the road. People forget things, paperwork has gone astray, it just becomes a greater challenge for you. And if your patients do pay on-site on a regular basis, strongly recommend that you invest in a credit card point-of-sale terminal, or many of these organizations do offer a web service in place of your traditional credit card point-of-sale terminal. The web service is very easy to use, and what it allows is another medium of payment versus check or cash. In this day and age where people are carrying a little cash on them and pay via plastic, via debit card or credit card, these types of services allow for better cash flow and allowing your patients to pay on the spot versus mailing a check 1 or 2, 3 weeks down the road. The costs are relatively minimal. The transaction costs in a private clinic run about 1.6% of the actual fee being charged. So let's say on $100, the credit card transaction fee would be about $1.60 or so, depending on which type of service you go with. If it's a debit card transaction, you're only looking at 8 cents, which is next to nothing. Web service for these types of transactions run about the same type of fees. So again, the costs are relatively low in relation to the advantages that you get by an immediate cash flow. Supplier purchases. It's extremely important to live within your means. Again, a challenge that we hear about quite often is practitioners lose sight of costs of purchasing either supplies or capital equipment for their operations, and end up getting themselves in a cash flow bind. There are a couple of easy ways to avoid these. There is no surefire remedy. I will be getting more into the budgeting aspect of things in just about a few minutes. However, what I can say right now is always live within your means. If you make $100,000 a year, then don't go out and try and spend $175,000. That's a recipe for disaster. Nextly is when you're making any type of significant purchases. Now, I've only used an example here of $100. Significant in your eyes may be $500. It is important to try and get 3 different quotations from suppliers for whatever type of item you're looking to purchase. I know here at Theralays, we have to follow ISO 13485. It's a standard that we must follow in regards to purchases, where we must get 3 different quotations. And we see on a regular basis that we encounter cost savings right across the board because of the competitive nature of quoting. Either we are able to find cheaper quotes by comparison, or you'll find that suppliers, knowing that they want the business, will say, okay, I will beat or match your lowest quote because they want that business. Lastly, rather than paying on the spot for any type of supplier purchases, if your clinic has been in business for 2+ years and you have a decent credit rating under the clinic, many suppliers will allow you to open up what's called a trade account with them, which allows you to be invoiced and allows you to pay 30 days down the road. Again, that's actually a very good way of managing your cash flow as well, because it is an interest-free loan. So if your business if you're finding that you're constantly running into a cash flow problem with your business because either your group insurance remittances are taking longer than expected, patients aren't paying on time, it allows you to leverage your suppliers as a means of cash flow by having a trade account with them and paying 30 days down the road versus on the spot via credit card or cash payment. Nextly, suppliers are not perfect. I get to see one organization in my 20+ years working in accounting whereby there's never an error on an invoice. It is important that when you purchase some product or consumables for your operations that you review. If it's not yourself, you have someone else doing it for you, that they are reviewing the invoices that are coming in, cross-referencing it against your supporting documents. If you keep a purchase order catalog for purchasing items, or if you have some sort of outgoing record log of what you're purchasing, make sure that what it is you're being invoiced for is in fact what you've ordered. Quantities are correct. The quoted amounts are correct. Therefore, there's no chances of being overbilled. You should also make sure that you're reviewing your outstanding billings on a regular basis to ensure that your suppliers are being paid on time. Again, if you're trying to establish some sort of credit with your suppliers, maintaining a good relationship with your suppliers will allow for credit references going forward. If you're looking to do some serious capital purchases, whether you're looking to purchase some additional tables, modalities, therapeutic laser systems, for instance, or do an expansion on your clinic. It allows to have those type of credit references if you're maintaining a decent relationship with your suppliers. And then the banks look at these type of credit references and can more easily offer you bank loans to finance your clinic expansion or growth or the need for additional capital equipment. It also allows you to minimize late fees and interest that suppliers may or may not charge you. And again, late fees and interest are just an unnecessary cost of business. They were not included in the purchase price of your product, therefore you should not be paying them. So if you're maintaining a decent credit relationship with your suppliers, they more than likely will not levy any type of fees or interest on you. And it also, lastly, a very important point, it really avoids the debt spiral. If you find yourself putting off paying your debts, those debts are not going to go away. If you purchase things or if you owe money to people for whatever reason, the debt is not going to go away. So it'll only mount, and before you know it, you've got an unmanageable amount of debt, and you'll be trapped in what's called the debt spiral, and before you know it, you cannot get out of it. and either you're claiming for bankruptcy or you're selling your operations because you can't afford it anymore. That's just the wrong way of doing business. So keeping a decent decent eye upon your debts will avoid that type of thing, and making sure that you're leveraging your suppliers again helps with your cash flow. Many operations do have a cash float on hand for petty type of expenditures, whether it be a courier running out to buy small supplies that are necessary to operate your clinic. We at Theralaze, we keep a cash float on hand at all times because there are on occasions where we need to make some small purchases. It is important that you have a way of managing the balances on these accounts, making sure that everything's accountable, and balancing them on a regular basis to ensure that there is no money going astray. There aren't any greasy fingers involved in here. I'm going to show you a very simple way of managing this that I've incorporated here at Theralaze. Bear with me. Okay, this is just a simple cash balancing spreadsheet, and I don't know how familiar some of you are Excel spreadsheets, but this is a very, very simple layout, and we can offer you this as a template if you'd like after the presentation. Simply request it, and we will most gladly provide this template to you and the other templates that we'll be showing you a little bit later. Let's say, for instance, there was an expenditure for stamps. You spend $10 worth of stamps. You have an opening cash balance of $329, and you're making all of these petty cash expenditures for either change to your patients, buying stamps, or just buying donuts and coffee for your staff itself. You can manage these inflows and outflows quite easily utilizing this template. Simply, for instance, let's use this first one here, an example of a $10 outflow for stamps, for instance. In that situation, in your cash flow box, you're going to have denominations of all of these types of currencies: $10 bills, $20 bills, 50s, maybe 5s, loonies and toonies, and even small change. As your cash goes out, you would minus it or subtract it in this lower area here, and it would equal the outflow here in this upper area. So, for instance, if you spent $10 here, you may have spent the $10 worth of two $5 bills. As you can see here, I've subtracted 2 from the original 3, and that keeps you in balance at all times. Your patient, John Doe, paid you $100, which you would keep into your cash flow balance. You would add it in here as $100. Simply by adding 100, it would keep you in balance. Or he or she may have paid by a series of 20s, 5 20s. In this situation, I had it here as the patient paid via 5 20s. So my starting balance was 11, and I've added 5 to it. The last one here, you may have bought some coffee and donuts for staff, paid $20 for it. That would have been an outflow of a $20 bill, and here you can see I subtracted one $20 bill, and at the end of the day, my tallies are it's all self-tabulating. At the end of the day, I should have here a combination of change and paper currency totaling $399.33. And I do, and as you can see, my difference is 0. So I'm constantly keeping a running balance of my cash on hand. So what this allows you to do, rather than waiting 30 to 60 days to make sure that you have the proper amount of cash on hand, or if you're not balancing at all, you never know how much cash you have on hand, it makes sure that all your checks and balances are in place. And this helps out your accountant when he does your financials for you as well. He has to record the inflows and outflows of cash. It helps him or her, to better input these into your finances, your financial statements, if he knows the manner in which the cash was expended, versus little receipts after the fact where he's got to wade through 30 to 40 little receipts and try to figure out what's what and then try and balance this for you after the fact. If you're having this done on a regular basis, it makes his or her life easier, and as his or her life becomes easier, his billings to you become less. Instead of him taking 3 or 4 hours to prepare your financials for you, he can actually get them done in 1.5 hours, meaning that his hourly billings to you are lower, and again, you're reducing your costs. Taxes, this is always a fun issue. In Canada, there's actually really only one province there's two provinces that still have provincial sales taxes. Everywhere else is migrated. Either it doesn't have a provincial sales tax, that being Alberta, or they have migrated into the harmonized sales taxes. And in the U.S., I will talk about your sales taxes in just a moment as well. Basically, provincial or even state sales taxes, they are attached to selling tangible goods. Now, if you are selling tangible goods which are prescribed as a practitioner, it is exempt from sales taxes. That's pretty much the same in Canada and the United States. If you are selling any type of tangible goods, and when I say tangible, that is something you can actually touch. Let's say, for instance, you sell ointments at your practice, and the ointment was not a prescribed item. It was a biofreeze, for instance. And the patient decided to purchase it off your display shelf. It wasn't a prescribed item. That would attract sales tax, and it would be the same thing whether in the United States or Canada. It's the exact same applicability. You are required to charge and remit to the respective governments, whether it be the provincial governments or the state governments, a sales tax based upon that type of sale. In order to do that, you would obviously need to register. So you need to assess in your clinic if you are in that type of if you have that type of selling arrangement, and if you do, you should be staying on site, avoiding problems with the tax authorities, and registering for provincial sales taxes if it is applicable to you. Like as I mentioned to you previously, many provinces have gone away from the provincial sales taxes and now harmonized their sales tax with the national sales tax, that being the GST, making it the HST. There's only two provinces remaining with the sales tax, that being Manitoba and Prince Edward Island. Alberta does not have a provincial sales tax. In the U.S., every single state has their own particular sales tax, with the exception of 5 states, which I will get to in just a moment. Each state is very particular in the way that they handle their sales taxes. There is no linear application. The only type of commonality is the fact that tangible goods attract sales taxes. In Canada, again, the national sales tax is the goods and services tax, which is applicable really in 3 provinces right now, that being Alberta, Manitoba, and Prince Edward Island. It is not applicable in the U.S. It is exempt. The United States does not have a national sales tax. They only have state sales taxes. GST is exempt from chiropractic fees. It is chargeable upon anything else, that being tangible sales of goods. If you're selling something tangible, again, ointments, which are attracting a provincial sales tax, it will also attract goods and services tax. Again, chiropractic and physiotherapy fees are exempt from this type of tax. The goods and services tax and the harmonized sales tax, which I will discuss in just a second, are not a cost to an operation, and that's a very important concept. A provincial sales tax and a state sales tax is a cost to an organization. Really, what you do with a GST, and this is something you may want to discuss more in detail with your accountant, and I will get into greater detail with this in just a few minutes. Basically, this tax and the harmonized sales tax is a recoverable tax, and I'm going to get into how you recover that in just a moment. As I mentioned to you previously, the harmonized sales tax, which is now applicable in 1, 2, 3, 4, 5 provinces, and maybe 6 going forward. What these provinces have done is blended their provincial sales tax with the national goods and services tax, the GST, to create one tax. There's been a lot of argument about this. To the average consumer in Canada, this is a cost to the average consumer. To a business that is registered for this type of tax, it is not a cost. As I mentioned to you previously, both the GST and the HST are recoverable taxes. The way they work, they're pool taxes. So let's say, for instance, you are registered to collect either GST or HST in your particular province. Your GST or HST that you charge to your patients for whatever type of services which attract that, and again, chiropractic and physiotherapy fees are exempt, so it would be more or less If you have a massage therapist on staff that is not exempt, that does attract GST and HST. Or if you're selling tangible goods, it will attract this tax as well. Your taxes that you are billing your patients are pooled into a payable account, meaning this is the amount of tax that you owe the government at the end of either the monthly or quarterly period, whichever may apply to your practice. And let's say, for instance, now you also you purchase goods. Whenever you purchase goods, you're either attracting GST or HST, depending on which province that you live in. Sorry, you're operating in. That tax is a recoverable portion of it. It is pooled into a receivable tax account. At the end of the reporting period, basically, it's a very simple process. All of the amounts that are pooled into the amounts that you've collected in from your patients is netted against your the taxes that you've pooled from your purchases. And whichever is the higher of the two, let's say, for instance, the amount that you paid out for purchases is higher than the amount that you've collected from your patients, that amount, that net amount, is refundable from the federal government in totality. So let's say, for instance, you collected $100 from your patients, but you paid out $200 worth of GST or HST for purchases. You would actually receive a refund from the government of $100 based upon that type of scenario. So again, it's a fully recoverable tax. It's not a cost to an organization, such as a provincial or state sales tax. As I mentioned to you previously, there are 5 states which are exempt from state sales taxes, that being Alaska, Delaware, Montana, Oregon, and Vermont. They do not have any type of sales taxes whatsoever. All other states do have a sales tax, and again, the only commonality that I'm aware of is that the sale of tangible goods do attract a state sales tax. In regards to other types of scenarios, it does vary for each particular state. Here at Theralace, when we have sales in the U.S., we actually have a matrix that we consult with to determine exactly what is the tax treatment in every state. There's no way I could actually tell you exactly a linear type of application. Again, chiropractic and physiotherapy services are exempt in most states. I can't say for certain off the top of my head. I have not examined this for every state, but the ones that I have looked at, which are about 22 states, these type of services are exempt. And again, it does vary from state to state. It's a pretty simple process to do this. Really, when you're charging out any type of sales tax for sales from your clinic, it's tracked in a separate little account. It's a payable account. And at the end of the remittance period, most of these remittance periods are every 3 months. Whatever that balance is in that payable account, that is what's remitted to the government, state governments, in regards to how much you owe. If you are selling any type of tangible goods which are outside of a prescription, it will attract state sales taxes. And you should make sure that you're on side. I know the states are really cracking down on this because there is so much deficit activity in both the state and federal governments that they are really cracking down on this, and they want to make sure that all businesses are paying their taxes in accordance with the applicable legislation. In both Canada and the U.S., I've only stated Canada here, but the U.S. has very similar rules. It's very important. I know many practices utilize freelance staff, especially for massage therapy services. It's very important that you stay on board with this type of issues I'm going to address here, as the Canada Revenue Agency, and I know the IRS as well, really cracks down on this hard. If you are employing these individuals as freelance/contract staff, there are specific tests, and the tests are very similar both in Canada and the U.S. as to if these individuals are truly employees or contract staff. If you pretty much exercise control over these individuals, if they if their function within your clinic is their primary role of income, there's a very good likelihood that both the Canada Revenue Agency or the IRS will classify them as employees, and you would be responsible for all payroll taxes, and they would also have to be treated in accordance with either state or provincial government employment labor laws. It's very important, and I know this, both Canadian and U.S. governments are cracking down on this. And the last thing you want is to be caught offside on this, as there are penalties, and you would have to back pay payroll taxes. There are 5 specific tests in Canada, and I know the tests are very similar in the United States. What they're looking at, more in a nutshell, is control and the chance of incurring an income through your operations. If you exercise control over these individuals, as I mentioned to you previously, if their role within your clinic is their primary source of income, if their tools of the trade are located within your clinic and only your clinic, they don't bring them and take them with themselves, there's a very good likelihood under that type of scenario that those individuals are really classified as employees versus freelance contractors. And you may want to get yourself on side by putting them on your payroll and paying the applicable payroll taxes and treating them in accordance with the proper labor codes, labor laws, sorry. And again, it's pretty much the same both in Canada and the U.S. Obviously, there are advantages and disadvantages of treating people as contractors versus employees. But at the end of the day, the penalties that you face are really not worth it if you're caught. There are advantages and disadvantages when you're leasing capital equipment. For instance, I know many practices, when you're buying chiropractic tables or physiotherapy treatment tables, even for massage therapy tables or laser therapy modalities, computer equipment even. Many practices will lease this equipment versus purchasing it. And there's strong advantages to leasing. I know here at Theralace, many of our customers choose to lease versus paying by cash. The advantages really are is a cash flow perspective. First of all, the lease, if it's treated as an operating lease, and I'm not going to get into the details of it. This is something you may want to discuss with your accountant. Many of these types of leases are classified as an operating lease, meaning that the expense, the lease expense, the monthly payment, is written right off of your income on a monthly basis, meaning at the end of the day you pay less income tax. That's taking into account that your operations are making an income. You have to be careful when getting into a lease that you determine with your accountant if you're getting into an operating lease or a capital lease. They are treated differently, but at the end of the day, the cost is, at the end of the lease term, let's say you're in a 5-year lease for a particular item, at the end of the 5-year lease, the cost that you assume is pretty much the same. It's just the treatment of them is slightly different. Well, not slightly, there is a significant difference. In an operating lease, it's strictly going right to your income statement and taken right off your income. In a capital lease situation, you're essentially capitalizing, you own the product, and you're depreciating it against your income versus writing it off as an expense. At the end of the day, like I said, they pretty much work the same in regards to cost is concerned. It's the accounting treatment that does differ, and it is something you should discuss with your accountant when getting into a leasing scenario. If you are getting yourself into an operating lease versus a capital lease, and there's a specific 3-part criteria. If the lease abides by any one of the 3 criteria, it is considered a capital lease versus an operating lease, and your accountant can easily explain that to you based upon your scenario. It's just good to know at the end of the day how you're getting involved in these leases versus just signing up and signing documents. So you know how to better examine your financial statements, and again, as I alluded to previously, managing the financials of your operations. Some other miscellaneous items: financial document retention. It is important that all practitioners know that all purchases, your invoices, you should keep them for 7 years. Your patient billings, you should again keep them for 7 years. Your financial statements, unlimited. The reason why there is a 7-year stipulation there is the IRS, or in Canada the CRA, they have the ability to look back into your financial dealings that period for audit perspective. And if you don't have your proper documentations retained, and it could be very difficult to prove things if you're audited and either the CRA or the IRS come back to you and ask for support for certain types of expenditures or income claims. This next part I'm going to talk to you is, I'm going to try and keep it as simple as possible, but I consider this to be a very important part of truly managing your clinic operations from a financial perspective. Budgeting. Budgeting is always fun, but it can be very simple actually. This is a very simple budget template that I created for the typical clinic itself. And again, this is available for, that you can obtain from us at no cost whatsoever after the presentation. What I do recommend that at the beginning of the year, use a practitioner, maybe after a Christmas dinner or during the Christmas downtime. Sit down and actually just plot this out. It's very simple to do actually. On a weekly basis, you pretty much know how much you can intake as far as treatment fees, consultation fees, sales of ointments, and possible interest from a bank account balance. The spreadsheet is set up to do a self-tabulating cost when it comes to certain things. You can pretty much figure out from here how much you're going to pay out in salaries, whether it be to yourself or to your staff. Again, it will self-tabulate certain payroll and potential bonus costs. And then from here, it's a matter of plugging boxes in regards to what type of known expenditures you're going to have, whether it be for training, benefits, overhead, the maintenance on your clinic, property taxes, types of clinic supplies, legal costs if there's any, if you advertise. You can plot out on a weekly basis, and it will extrapolate for you automatically monthly, and then, on a monthly basis, it will automatically extrapolate this out for you. So you can have a better idea on what your annual financials should look like. Now, this helps you actually. Let's say, for instance, you review your financials with your accountant every month. Let's say you plotted this out on December 26th, nice day after Christmas. And you've now sat down, and at the end of January, you're sitting down with your accountant to discuss things. And by your budget, you should have an operating income of about $2,800. And let's say at the end of the day, you actually came up with an operating income of $2,000. Well, that's a little bit less than you had budgeted. It's a good idea. Your accountant will have your financial statements, hopefully by that point, completed. You can actually sit down here and do a comparison as to where you may have had some underperforming revenues or some unexpected expenses. And this will help you to map out the future months. And at the end of the term, end of the year, if you're constantly doing this, you should have a decent amount of income coming into your clinic. And income should mean excess cash in the bank if you're paying attention to it. What it will also allow you to do, if you're finding out that some of these expenses are out of control, it'll get you into a better situation to handle these expenses quick in a proactive sense versus a reactive sense. If you're not really examining these issues until 3 months down the road, you may find that your salaries for your staff are going way out of control, and by the time you actually do anything about it, you're now 5 months into the year before you can actually get them under control. That's kind of late. If you're taking care of them starting January and you're paying attention to them in February, but if they are starting to go out of control, you can deal with them in March right away versus waiting until possibly May. If you're finding that your clinic revenues are just going amazingly well, it may be time to add on freelance staff, additional staff, which can help you to even increase these types of revenues. Because the last thing you want to do is to turn away patients because they're waiting 2-3 hours in your waiting room to see one of your practitioners, or yourself for that matter, because you're just overbooked. It'll allow you to increase your revenues incrementally. At the same time, you'll actually determine what type of costs are attracted to this type of incremental revenue. Alternatively, if you're finding out your revenues are on the lighter side, it may be time to cut some of your expenses. You can actually determine from here where you should be cutting expenses if you're dealing with this proactively. And again, the spreadsheet here is designed to take things on a weekly basis, and it will automatically map them out on a monthly basis for you. But you can always manipulate these things on yourself. For instance, these cells here have a formula to map things out for you, but you can override. It's set here to compute a cost here in training of $217 a month. If you know that you're not going to spend $217 a month, it may only be $150 a month, you can subtract out $67 from this, and hence, whoops, I got this protected and won't let me do what I was trying to do. I will have to unprotect it, but you could actually just change this formula to subtract out $67, and it would reduce it to $150, thereby allowing you to customize some of these expenses for you. I find this to be a very important tool if you're trying to get a good foothold in regards to managing your clinic from a financial perspective and dealing with things on a proactive stance versus reactive. Reactive, as far as I'm concerned, you're putting out fires. With a proactive way of dealing with things, you only have upside potential, whether it be maximizing or increasing incremental revenue or reducing expenses if they're running out of control. And I forgot one thing in here. I sort of jumped across. A very important part that goes along with budgeting is dealing with your cash flow. I've alluded to cash flow several times here. And again, I've got another nice little template here, and again, this is provided to you free of charge, which will help you to better manage your cash flow on a regular basis. So there's no surprises. If you expect to have $6,000 in your bank account at the end of every month, by making sure that you're doing some sort of forecasting, will prevent any surprises. The last thing you want to do is to expect to have $6,000 in your bank at the end of the month and look in your bank account and find there's only $2,000. Well, that can be a little bit disheartening, especially if you have 5 people to pay on your payroll. So essentially, what you would do with this type of a template is plug in your opening balance, and that's straight your particular bank statement. And then from here, I've got other little templates here. This is your AR, as I've alluded to previously. This is your accounts receivable, i.e. your patient billings or your insurance billings. And I've got a couple of examples in here. Blue Cross, John Doe, Mary Jane, Joe Smith, Sun Life Insurance. I know it's not as creative as you would like me to be, but so these are some balances that you are owed. These are monies that you're owed. And if you're using an accounting program, this will automatically be tabulated for you. If you're using some sort of other system, there should be a way to pull this information out of your patient billing system. Very simple to do. It shows you right there exactly what is owed to you. On your cash forecast sheet, Blue Cross, for instance, if you know that they pay you, they don't pay you very well, it may take a couple of weeks. What you'd simply do is link these two cells, as I've done here. It's a very simple process. I would simply do an equal sign, go to my AR sheet here, and click on 3600. And I get my 3600. Let's say, for instance, your insurance billings, I'll just delete it from there. Let's say it takes a little bit longer. So let's say it takes a month to get your insurance billings. I took it out of the 2-week period, and I'm now into my 4-week period. I do an equal sign. I click on the AR tab, and I click on that, and I hit enter. And I've now got my cash flow expected in February of that month. And for patient billings, you do the exact same thing. If you know that on a weekly basis you have 5 patients, in this example I've got 5 patients that pay $65 a session times 3 days a week. Sorry, 5 patients at $65 a session times 3 different types of sessions gives me about $975 for, sorry, three separate days gives me $975 coming in for cash. And you can map that out pretty simply for every single week based upon what you know patients pay for by cash. If you've got certain patients that you allow a credit term with them, your payer can allow 30 to 60 days for your patients to pay. Again, in your AR file here, you have your John Doe, your Mary Jane, your Joe Smith. These are your patients. Again, you would simply determine exactly when you expect them to pay. Like for instance, this one here of $350. You simply link it back to where you expect the patient to pay. In this particular example here, I've got Joe Smith. I can to pay 2 weeks out from here. I've got another patient here expect to pay three weeks out. From doing this, it's pretty basic to map out what your cash inflows. The sheet allows you to map out your cash inflows. Now below here are your cash, and these are your supplier payments. Accounts payable, as it's better known, or depending on the type of system that you utilize within your clinic, are quite easily obtainable. If you rely upon your accountant to give you these reports, again, he or she should be able to give this to you within no time whatsoever. I've got 4 different suppliers here. They've allowed you credit terms. A typical supplier credit term is 30 days. Some suppliers will go a little bit longer, but they're very few. The predominant credit term is 30 days. So let's say, for instance, you purchase something from, and these dates are a little bit outdated here, bear with me here. ABC company, some item from them for $500 on December 15th. In 30 days, that being January 5th, you should be paying that supplier. Let's say you're a little bit late there. You would end up paying that supplier, and again, you may end up paying that supplier via cash, which is just straight from your accounts payable, or you may pay by credit card, or you may do from a line of credit, which is down here. Essentially, what you're going to do here is just map out when you expect to be paying your suppliers based upon your date of the initial billings. What you're really doing is paying attention to this column right here. You're going through 3 days after the policy as to when you're paying them, and you would map them out depending on the mode of payment. Whether you're paying cash, it would go onto this line up here. Or you're utilizing a line of credit to pay, you pay down here. Or if you're paying by credit, you'd plug it into the applicable cell down here as to which form of payment you're actually going to utilize. Obviously, you have to pay your credit cards on a certain period of time. You'd have to map out your credit card payments within here as well. You have payroll to make every 2 weeks, 2 to 3 weeks, depending on your case. What your outflows are as far as payroll is concerned. Lease payments or insurance payments, which typically come as a direct payment out of your bank account, you'll have to make sure that you include those payments here as well. If you're registered for provincial or state sales tax, they are due more than likely at the end of every month, or you want to make sure that you include them here as well. For the payroll tax, health tax, they would come out here as well. Charges, you may have bank charges to maintain your account. You plug in your bank charges based upon when you expect them to come out. Now, that is an overview. Map out your cash inflows, which are here, and your cash outflows, which are down here. So at the end of every week, if you're mapping out what you expect versus what you expect to expend, you will know what your balance should be in your bank account on a regular basis, where you'll have a decent forecasted idea. At the end of the month, if you're paying attention to your cash flows and they're going according to plan, that $6,600 that you expected, or $6,000, whichever the case may be, will in fact be that case. If you're finding out that it didn't happen, this type of template will help you to examine where you're dysfunctional, essentially, in regards to your cash inflows and outflows, and how to better manage things. You may find that you're probably spending too much money by doing this in conjunction with comparing to your budget, and you may have to cut expenditures. Again, these little tools help you to better manage your cash flow. So at the end of a period, let's say a month, for instance, there are no surprises, and it really helps you to accumulate wealth in your practice, which is the common goal, rather than to get yourself stuck in a debt spiral, or to be basically just barely getting by, and wondering why aren't things improving. And that's all I had for you today. I open the presentation up for any questions that you have or any issues which I have not addressed. And I'd gladly take an attempt to any type of questions which may or may not have been addressed.
Thanks very much, Anil. This is Dr. Mostyn speaking. I'm the organizer of this webinar, and I'm the Director of Clinical Services and Training at Theralays. We're going to be taking in all the questions just in a moment. I just want to start off with a comment that came in from one of our attendees, who is I'm assuming is a massage therapist, and their comment is, for registered massage therapists in Ontario, they are required to keep all patient records for 10 years, not 7 as required by the CRA. So ultimately, each discipline should really look at their own college requirements. Sometimes the college makes recommendations rather than requirements. The true requirements might be by the CRA, and those might override the college, but the college does make recommendations that you really need to abide by. So it could be that for you, you need to keep your records, all patient records, for 10 years. So, Anil, I'm going to pass on. I know you were taking in some questions earlier. Let's hear some of yours.
Well, I did have one here. Does Theralays provide any type of assistance with group insurance billing codes or billing itself to your practice? Can anyone provide any feedback there from your perspective? Are we doing a decent job in regards to assisting you with that when it comes to billing? I'll wait. I'll just give you a couple of seconds if you'd like to respond to that.
Oh, okay. So yes, we do assist with billing. We do, for example, if you are working in the U.S. and we always take in a lot of questions on CPT coding and billing, we do have information that we can pass on to you. If you just contact us directly, we'll give you some of our guidelines in terms of CPT codes and insurance billing. So we do provide some support that way.
One of the questions I like to throw out to the participants here are, what are some of the accounting or finance-related challenges that you face on a day-to-day basis, which I may not have addressed, that I'd be happy to try to address right now?
Okay, Neil, are you taking in those questions?
I haven't seen any just yet.
Okay, well, I want to thank everyone for attending. We have some more questions coming in, but we are running out of time. We let you know we're going to wrap up by 2 o'clock, so we want to keep you on time. You've got busy clinics to get back to, but please feel free to send in your questions. We will get back to you through your private email following the webinar. And thank you very much for attending, and thank you to Mr. Anil Singh for conducting a fabulous webinar today. Thanks, and have a great day.
And I'd just like to remind everyone, if you are interested in obtaining those Excel templates that I was going through during the presentations, feel free to drop us an email. We would gladly provide you with that. And I gladly walk you through those again. I know going through them in the space of an hour might be a little bit too quick. I would gladly spend a few minutes going back through them with you. Again, the idea is for you to better manage your finances than have you run into financial difficulties because you're not able to proactively manage your expenses.
Okay, thanks very much and have a great day.
Thank you.